let's go over right now to my screen here. We're on the newsletters tab of TFNN. We're checking out right now Mastering Probability newsletter by Steve Rhodes. Steve, of course, comes on every Monday for the show, and he hosts the Trader's Edge on 11 a.m. Eastern Time right here on TFNN. With all this whipsawing in the market, right, it really helps to have some people with very good experience kind of give their thoughts and have some actionable advice. I start every day reading Mastering Probability newsletter. Of course, love listening to the Trader's Edge show. If you do not tune in for that, I really recommend doing it. Steve, of course, takes questions from viewers, and really, I think it's just a phenomenal show. So check out Mastering Probability newsletter. What I want to say is that if this is your first time subscribing, because I know we have a lot of new viewers with everything going on in the market, at TFNN, we have a 30-day money-back guarantee for all first-time subscriptions to any newsletter. So you can do this completely risk-free. Yeah. Steve, how are you doing?
Hey, Jacob, we've got really a bad sound connection, so I don't know how clear I'm coming through.
You sound perfect.
I sound okay?
Yes.
I'll tell you what, then, if that's the case, just to kind of keep this flow going here, let me go through, what it is that I'm seeing, maybe inside our little tiger's den between you and I. Maybe if there's any questions or what have you that you've got, you can kind of share that with me, and that way I can, go right to charts and things of that sort.
Absolutely. Yeah.
Perfect. So, this really, what I've kind of put together, my thoughts with regard to what to talk about this afternoon, kind of really flows into what you were already discussing. So that's pretty helpful. And as we were going into the break, you were talking a little bit about the U.S. dollar index and gold.
Yeah.
And the market. So that's what I wanted to talk about as well, at least with regard to what I'm seeing. So the very first thing that we're going to take a look at here is a quarterly chart for the U.S. dollar index. What we can see is that since 2022 out here, we've been trading in a clear sideways consolidation. Now, you'll see some profile levels. Those are the red horizontal lines on my screen. And the profile back in 2023 timeframe, the profile that formed on a quarterly basis is below price. And from a profile standpoint, that's really a bullish message out here. So we're at the bottom of a consolidation pattern on a quarterly basis, or very near that. And so the question is, what do we see on the other timeframes out there? Well, instead of going and taking a look at the U.S. dollar index, what I decided that we would do is we take a look at the three primary currencies that make up the U.S. dollar, three of the five that make up the U.S. dollar index. And the first one that we're going to start with is the euro. And the reason for the euro is because it's about a 58% weighting inside of the U.S. dollar index. So here are the patterns that we have for the euro. First, on a monthly basis, there's an actual A to B equals CD pattern to the upside that would take us back to the level. This green horizontal line is referred to as a TD9 count breakdown area. That's at about the 119 area. So that is one possibility that we're heading up to that level. But when we look at the weekly time frame chart, come this Friday, the euro will go ahead and form a TD9 count top. Now, in the TD9 count pattern, it's either bar, and as far as the top is concerned, the high has to be on either bar 8, which was last week, and that was not the case, bar 9, which is going to be this week, or the bar following bar number 9. So that says that the euro, which has got, again, about 58% weighting of the U.S. dollar index, should top between this Friday, or between right now, really, and next Friday. When I look at the daily time frame, the daily time frame is going to form bar number 8 of a TD9 count top. 90% of the time that a TD9 count top is in place on bar number 8, when it's up at the high, it goes ahead and it completes that pattern. So we should get a daily TD9 count top between today and Wednesday of this week out there. I've got the other intraday charts up here, but not really necessary for us to take a look at that. So that's the euro, which is saying that it is likely to top, and if it tops, it's going to impact the U.S. dollar index. If we take a look at the yen, which is the second weighting inside of the U.S. dollar index, and 13.6%. If we take a look at its daily time frame. So if I'm looking for bottom signals, which I am, so in this case here, when the yen is moving lower, it's actually getting stronger. The U.S. dollar index is getting weaker.
Yes.
And you'll see that bar number 8 is going to go ahead and form today. Again, 90% of the time we get a successful bar number 8, we get a completed pattern. And that says that we should see a bottom in the Japanese yen anywhere between today and Wednesday as well. Now, the weekly is trading into a prior TD9 count level out there. There's an A to B equals CD pattern to the downside. So it is moving into an area where it could or should find support. So it's really going to be the daily time frame. The third currency that I want to take a look at is the Great British Pound. And on the daily time frame, the very left-hand side, we can see that a TD9 count top is going to go ahead and confirm between today and Wednesday. On a weekly basis, price has made its way up to its TD9 count breakdown resistance level. That in itself can be a top. So what we're getting here from the three major currencies that make up 83% of the U.S. dollar index, they're suggesting that we're going to see a change in trend. That's important. And one of the reasons that's important, you were talking about gold and how this is certainly taking off to the upside. And certainly during geopolitical conflict, especially war. Yeah. And we have Israel that was, bombing the Gaza Strip again over the weekend. And the gold, although I don't have it here, we can take a look at it on my other charts. You've got gold trading at new all-time highs in every Middle Eastern currency. It's trading at new all-time highs in most major markets, but not all of the major currencies out here. In the case of gold, on a daily time frame, today is bar number 7. I would think that gold will continue its rally. It could form a TD9 count for its daily time frame. As long as we rally, as long as we get over today's high tomorrow, just has to do it by 1 penny, we could get a TD9 count top between tomorrow and Thursday of this week. When we look at the weekly time frame chart, we're in bar number 8 right now. So again, here we could get a weekly TD9 count top between this week and the next 2, and the monthly is going to go ahead and complete its TD9 count top. What this suggests to me is that we should see a fairly significant April high in gold. Everything is lined up, both currency-wise, everything is lined up from a pattern standpoint on the daily time frame for gold out there. When I say, currency-wise and gold and everything is lined up, what that also means is that what I've thrown up here is I've thrown up the daily as the correlation that exists right now between gold and the U.S. dollar index. And if we look at the very bottom right-hand panel, you'll see the directional correlation. When bars are below 0, which most of them are, it tells us about an inverse relationship. When bars are above 0, it tells us about a direct relationship. Both go higher or lower at the same time. So we can see that since the mid-February time frame, we've had a really strong, one of the stronger inverse correlation time periods for gold. So you've got tops that are, you got what looks like the U.S. dollar index is getting ready to make a turn, and gold with daily, weekly, monthly topping signals as of tomorrow. That's assuming that gold makes a higher high tomorrow out there. So that was the first thing that I really wanted to be able to share with folks out there. The second thing is, and we talked about during the Trader's Edge show today, how the 60-minute time frame chart for the equity future contract, 3 of the 4 had bottom signals, but the 4th one didn't. I always like to, if we're going to form a bottom, you like to see all charts doing the same thing. Well, it turns out that right now on the 30-minute basis for the ES, the NQ, the Dow, and the Russell 2000, those are the 4 equity future contracts up on our screen. Here we're talking about the TD9 count pattern as well. Now, the Russell 2000, we have both a TD9 count pattern and a Rhodes Momentum Indicator bottom. So what this suggests, folks, is to watch for a rally. Now, rally levels that you're watching for in the ES are 51.62, 51.73, and 52.29. And for the NQ, it's 17.901 and 18.165. Sorry for all that. So hopefully that was fairly clear. It's still really kind of nasty on your end out there. So I just want to bid you a great day and a great week out there. And sorry that we didn't have a chance to really communicate out there.
Steve,
but
that's okay. We'll see you tomorrow at 11. Really looking forward to the show, okay? Thank you for coming on.
You bet. Take care.